Okay guys, welcome to today's video. I have to just apologize for yesterday's video. I discovered I was just going through the YouTube today and discovered that I saw a lot of comments complaining that there was no sound. I was not even aware of that. I don't know how come the recorder did not capture voice, right? That is really disappointing. But at that point there was nothing. I didn't know what to do. Okay, I think I will just do like a continuation and maybe repeat some of what we talked about yesterday. What I was trying to talk about. I think I was trying to. The topic was how to catch continuation trades, having missed the main move, right, from the point of interest. How to catch a continuation, right? Now you know the direction. You have missed the main move where market shifted from, and market is going bullishly or bearishly to the direction it wants to go. Now how can you catch those moves, right? I think that was what I was trying to explain yesterday. And so I'll just be going because it's a very important topic, yeah, especially for intraday traders or day traders. You want to be able to catch moves as market is moving in a specific direction, and you know that, oh, maybe market is going to target a weekly high or a monthly high, so that will be lots of days market will be playing out, and you want to catch that move since you already know the direction. But how would you catch that move? Okay, so that was what I explained yesterday. So I'll just make today's video like a part two, a continuation. I'll just review, we talk on what I said yesterday, and we just have that. So basically, catching continuation trades are, they're not hard, since you know that the major thing, right, in the market is to get the market direction. If you know the market direction, which is directional bias, either you're going up or you're going down, it's now easy for you to look for liquidity and point of interest you want to target. Now, still the same thing after you've caught, for example, right, let's look at this pair, let's look at this particular pair, right? This is Havax, right? Now I talked about it yesterday, so I'll just redo that. You see the market is bullish, right? Then all the way from this high, market went to this low, create this swing, right? There was a sweep here. Okay, we saw this beautiful sweep. Then after market made that sweep, it went all the way to create a shift, right? There was a break of structure. It took out even all the previous high, right? So at this particular point, you have a swing low on the swing high, even basically on higher time frame, right? You can see this is clearly seen on the 4-hour time frame, which is our analysis time frame. It means you have a new trading range, right? It means market moved all the way from this, it swept liquidity all the way to the high. So it means you have a swing low, a swing high, and now you have a low that has swept liquidity, which is protected. So you know that, oh, what you want to target, if this market continue moving bullishly, you would want to trade inside this range, right? Allow market to retrace into discount regions where it wants to buy for a continuation to the upside, right? And there will be a particular order block right here, which is the order block that took out liquidity, right? If you go to smaller time frames, you see it very clearly. You can easily mark your order block right here on the 2 hours time frame. You have a beautiful order block, right? This is what I was outlining yesterday. There was equal low liquidity, right? Remember 2 days ago we were talking about what's it called, confluences, right? Stacking up confluences, and I told you that SMC, of course, it's a beautiful strategy, but there are different confluences you want to see, right? For this particular trade setup, this was what actually appeared, right? We have a low that swept liquidity, right? Book structure creating two equal lows, which are form of liquidity, right? Engineered liquidity. Market coming down to sweep it and create that continuation move to the upside, right? So this is the form of the SMC setup that appear, where you have two equal lows, right? Two equal lows liquidity. They are very strong. When market creates it, market tends to come back, right? And also, apart from the two equal low confluence that we saw, there was also a sweep of the previous low, making this guy a protected order block. And apart from that, the order block also created a 3 candle move, which what acts as what it means an OB with a fair value gap, right? So sweep, protected low, order block with a fair value gap, two equal lows, liquidity. It's a beautiful and high probability trade setup. Why? Because all these confluences are outlined. An order block, a point of interest that swept liquidity, that moved, created displacement move to the upside, creating a fair value gap. There was two equal lows, liquidity. Remember, we've talked about equal lows, liquidity, right? Liquidity resting on equal lows and equal high. Market created that as inducement, coming back down to take out that structure and pull up. So that's what we saw here. Market creating this beautiful form of OB, right? Protected OB, two equal lows, right? Market took them out, and boom, we had an aggressive move to the upside. Now this is where you now say, okay, how do we catch continuation trades? Now this is where it gets interesting. So for example, you missed the setup, right, along this point of interest. You missed the setup, or it's either you missed it or you're waiting for that confirmation. Now what you want to see taking out is market should what take out the previous low. For a market structure shift, you want to have, if you have a movement that is downtrend, right, you want to have markets, right, after tapping into your point of interest, right, your major point of interest. Now for that confirmation, you want to have market, right, if you are not buying aggressively for this point of interest, you want to have market shift structure, right. It means market should take out the previous low, the previous high that pushed market down. Market, you want market to take it out, right. Then when market comes for a pull back, that's where you want to catch a continuation, you want to catch it. So this shift in market structure tells you that, oh, market is actually reacting from this because market was coming in form of a downtrend, right. So this is how you want to catch those confirmation and continuation trades from the POI. Then I will tell you how to catch it as it goes, right. So you can see what market did here. This was the previous high that made this low. When market tapped into this point of interest, we saw market moving like this, right, and market did this form of structure. We had a low, we had a high. Now market came back down, tap into the point of interest, right, before taking out the high, which you saw here. There was a form of resistance that created structure in an internal structure. The market took out the high, right. It didn't just stop there, it went aggressively and took out another high. So there was two highs. This one here, this high was taken out, and market also the previous high, right. You know, this was lower low, lower high, right. The previous high, the market, this was a downtrend. Market was creating a form of downtrend, so it went ahead and still took out this one. Now I was explaining something like this yesterday, that if we see structures like this, normally if there was just this structure, market shifted this structure and did not even go higher, say we had a shift, right, normally I would take this as structural liquidity, right. Then I would expect market to take it out, tap into the order block here for a continuation, right. But if the market goes way higher, right, if the market goes way higher and takes out another structure, right, there's now another break of structure apart from this one. So it means this structural low took out this structure one and went to take another structure. Normally you will have 2 points of interest, which is this and this. At this particular point in time, this one would be my first point of interest to take note of, to catch my trade. So if market has created a second break of structure from that region, I would expect markets to react from this point of interest and continue, right. You can see that's what happened here. If, right, if market had, after making this high, right, after making this high from this guy, after making this particular high, you can see, and market started retracing from this guy, I will not take a trade off this point of interest. I will wait for this one to be swept, market tap into this, then I'll buy, right. But the market pumped aggressively and created a new break, right? So you can see how market neglected all these imbalances and came back for this particular point of interest here, and this was the continuation move, right? So this is the first and kind of setup you can catch for continuation, or you would also see something like this where market would create a structural and breaks, then comes back down, takes it out and buy, right? So these two forms can happen, right? It did not go higher to break above, just like this one. So you can see they look similar but they are kind of different, right? This one now is not using this as a POI. This particular point of interest is serving as what? Liquidity to tap into the lower point of interest, right? Structural liquidity now, right? Because the market just took out this high, then came back down, right? But if it breaks this first structure and goes ahead to break another structure, I'll be using this guy as a strong point of interest to buy, right? So you can test this out, you can back test this, you can study, you can draw this out on your jotter, and you can study the moves, right, on different charts to see if it actually works, right? For me it works. Okay, so this is now where you catch a continuation trade, and you can see what happened. This was so beautiful. Now someone who got the entry from this point of interest would get a beautiful trade also if you enter aggressively. Of course, depending on how often you have seen the setup, you'd want to decide what kind of trader you want to be, right? Okay, so you can target these other eyes. You have a good 1:5. Someone here that takes the entry from this place also would get a beautiful trade, right? So you can see just stop loss below that and also target this high. You can see getting a 1:5, right? Beautiful trade. Now you know the market is still going bullishly, right? Because of course we have, if you go to analysis time frame, let me take all this out so we can have a neat, so I'll just leave all those, yeah, I'll leave the point of interest, right? So if you go to the analysis time frame, you know that okay, markets did, let's go to the daily time frame, right? You know that market, right, after creating this low all the way, we have seen a breakout, and now there is now a confirmed close. Let me take this one out also. Where is that? Okay, good. Right, so on this structure you now know that there is now a confirmed close above this region, which shows market is really moving bullishly, and of course you would want to catch good trades for continuation. Right, now if you have missed all this move, then look at that, where that break of structure occurred, right? On the higher time frame, we know we have to go to the daily time frame to see the swing low. So this is the swing low. Market moved all this way to take out the previous swing high, now created another swing high, so we have a low high on this particular range, right? So the thing is, catching continuation trade, so you missed this point of interest, right? Market created another one, I think, on the 1 hour time frame. You may not always see it, right? You may not always see it, and you need to be patient. Like, you've missed this one, you missed this one, then market is still going aggressively to the top, right, all the way. Now if it's looking at this, now there's no clear SMC setup, right? There's no clear SMC setup because the market has bought aggressively, right? Immediately mitigating this point of interest. From here we saw the shift, from here we saw the continuation to the upside, right? Market created another point of interest, move from this area, then pull up. Now you're now looking at smart, I've missed the entry, I've missed, and this pair has gone. There's nothing you can do at this point. What you want to do is to wait for price action, right? But I see a lot of traders at this particular point that the market is just creating a form of range. They will now go to a smaller time frame and want to be looking at structure here. You might be taking out at this kind of point. Now you want to go to 15 minutes, and you're now looking for 15 minutes set. You will hit stop loss, because what the market, after market makes impulsive move, market can accumulate for a while before a continuation or a pullback, right? So most traders now will now look at this thing that looks like a noise on 4 hours time frame. They'll go to 15 minutes time frame and they're looking to catch SMC setups here. Then before you know, these structures, they'll be looking at how to catch SMC setup on this range on 15 minutes. Then you get stopped out. Why? Because you're not just patient, you are trying to force a setup. If you don't have a setup in a day, it's not a bad thing if you do not see a setup in a day. The market is always open, right? What smart traders will do is they will wait for more price action, right? This beautiful setup did not just form in one day, right? After this impulsive move here created to catch the buyer, this POI, there was a lot of moves happening, right? But if you wait for the particular setup you're waiting for patiently, right? You saw this point of interest, you waited, market mitigated its shift. Now a confirmation entry, you bought, you target the previous high, you have won that trade, right? All you need to do is now to be patient for more price action, right? Let there be a clear setup, something like this that is clean and clear, that you would want to catch for a continuation. If there's no setup here, you don't need to start forcing. A lot of people now be forcing, they'll be marking different zones as PUI, and they'll now come, they'll mark here, you mark imbalance. It's not clear yet, right? Because the market can decide to do anything. Wait, let there be a pullback, let there be a break, so that you see a clean swing, right? If I wanted to catch another setup on this pair, I would not want to force it. I will wait for maybe, say, a pullback happens, right? Somewhere around here, I must not catch where it wants. I don't really care. Maybe a pullback happens, say this imbalance, the market breaks, right? Let me see a confirmed swing low and swing high, right? Once I see confirmed swing low and swing high, I now know that I have a trading range. And if market has created a new swing low, new swing high around this place, I now know that I have a range which is here. Then if I'm seeing a retracement, right, I now know that, oh, I have a range between this low and this high. For price to create a setup for me, then I buy, right? But doing anything around here, you get manipulated, you get kicked out. Why? You have missed good price action that has happened. Now all that happened was an impulsive move, so you want to be patient for more price action to catch the moves, right? To catch continuation trades, right? And most times it will feel like, the market is not doing anything, or all the pairs are basically doing the same thing. At that time, you want to sit it out and look for pairs that maybe did not move or creating their own setup, right? Then you can now go ahead and say, okay, good, I want to catch an SMC stop. But at this point in time, those who caught this move from this range and caught this one at this range, they are in good profit already, and they might have closed when market has swept this liquidity or tap into the higher time frame imbalance we saw on the daily time frame, right? This imbalance here, once I've tapped into it, that's where we got this rejection, right? So this is how you stay patiently enough to catch continuation trades, right? So on this lesson, we learned this setup, SMC setup. You can mark it down, right? Let me draw that again. Below that swept liquidity, market pulled up, right? Came back and create two equal lows, liquidity, swept it, and there was a shift in structure, right? So we had, just in case you now seen, because you know what we trade technically are past price action. If you see this kind of move again, you would want to trade it, right? So there was a point of interest here, then this was exactly how the move happened. Two highs, previous one here, market was made a pullback, took out all these highs like this, came back down, tapped into the other block, then you catch your continuation move. So this is how the setup played out there. So this was where the market structure shift happened, the previous high, but market went ahead to create another break of structure, if we had not seen a second break of structure on this high, this would have been a liquidity for us. But because the market went up all the way to take out these two structures, this guy now can serve as a what, protected low or a strong region that price can buy from, right? So this is a continuation trade move, right? So let me draw the other one so you can put it down. Remember, this one swept liquidity, right? It's a protected low. Okay, we saw this swing, beautiful. Then this was just the setup that happened on that particular pair, right? But you can have something like this also, where you have a low, a high, take out liquidity, break of structure, equal lows, right? Market coming to tap the POI. So let's do it like this, right? Equal lows here, that equal low liquidity. Then you can see market moving like this. Instead of taking the highs directly, there's a pullback and market breaks without taking the second one. You can see market shifting here, coming back down, use this as liquidity, then you have a break. Okay, so these are various forms. You see it, market will use now the second POI would now be the important structure, while this one will be a sweep, right? So these are some of the things and structures you observe. So you can see them, they look similar but they're kind of different, right? So these are some of the moves you can catch for continuation or confirmation trades, one of them, right? And as market moves up, you want to still focus on liquidity point of interest. Since you know the direction, let there be a liquidity the market is taking, internal or external, structural or induced. Then you target the point of interest nearest to that liquidity before you enter the trade. So thank you very much, guys. That will be all for today. Make sure you take this down.